So in this video, I'm going to break down how to create low risk portfolios of algorithmic trading strategies and why it's suited more, in my opinion, to busy professionals, people who aren't full-time traders. And there's a few reasons for that, and I'll break it down in this video. But first and foremost, let's break down what does low risk actually mean. For me, that's moving loss off the table as soon as possible. One of my biggest trading breakthroughs was not having fixed stop losses or fixed take profits for that matter. Depending on the market, I like to move and be fluid with it. So one of the first things that I like to do to mitigate risk is to move my stop loss to break even. Now, if you're a busy professional, you have a full-time career, and to do things like this is quite hard. You have to be sitting in front of the charts and literally waiting for the market to move. It could be hours, and you're moving your stop losses and your take profits. It's very hard to manage when you have obligations like family and work. And let me just go into some of the trade history just to show you what I mean by that. My win rate, I don't like to talk about win rate. It's not irrelevant, but it's not an important factor in my opinion. But you can see if you go through all of my trades on the right-hand side, the blues win, reds loss. My losses are very small compared to my wins. And that's significant all the way out throughout my portfolio. This particular portfolio is about 60% win rate. But you'll see there's lots of smaller losses and the wins are much, much bigger. And then every 15th trade, you have a much bigger win. That tends to be what this specific portfolio looks like. There's also lots of small wins and small losses. So you can see like a $47 win, which is tiny compared to this is a 100K account. It's currently up 13%. It's 113K, but $47 wins are very, very small. All that's happened is we've moved stop loss to break even automatically through the strategy itself. So that's the first thing I like to do. Is most of my strategies have that built in. You're moving a stop loss to break even. Secondly, I like to hedge myself, be on both sides of the market. So what do I mean by that? So right now I'm in two pending orders on the NASDAQ. I have one buy stop and I have one sell stop. And you can see here, price hasn't actually reached, let me just make it a little bit bigger. Price hasn't reached the sell stop, and it also hasn't reached the buy stop. If price starts to drop and I'm triggered into a sell position, I will be. But I'm always hedged, because what can happen, as a lot of you traders know, is whipsaw. Is you'll be triggered into a position, all of a sudden it reverses and goes the other way, which is fine, but I like to account for all eventualities. And in this type of scenario, when you're in two pending orders at the same time, it's okay if that happens, because you might go in for a small loss and then gain on the upside, or vice versa. So moving stop losses to break even is the first thing. Second thing is hedging, being on both sides of the market. And in most positions, this happens every day for me. It doesn't mean that I get triggered into the position, because at the end of every single trading day, I cancel, well, the algorithm cancels all pending orders anyway. But it's just a strategy I like to utilize. Again, to minimize risk. And if you go through the trade history, you'll see lots of small wins and lots of small losses because of that. And again, if you're a busy professional and you're trying to do this manually, it's so time consuming. Secondly is to trade more than one asset at any given time. And you can see on this particular portfolio, I have a GBP JPY, I have the German DAX twice, I have the NASDAQ twice, the S&P 500, USD JPY, and I have gold as well. So it's a bit of precious metal, a bit of currency, and some indexes, and that's generally what most of my portfolios are like. This is quite a small portfolio. I normally have 15, 20 strategies, so this is a little bit of a smaller one, but this is my low risk. I started this about three and a half months ago, and it's up 13.5% as of today, with very, very minimal drawdown. 1% drawdown max at any one time. So yeah, that's basically the strategies that we use to minimize risk. Moving stop loss to break even, hedging yourself in the market, and diversifying. And again, we built all of these strategies without utilizing any coding, without knowing any tech skills, because the skill set in this type of trading is instructing machines to do the work for us. In the day and age that we live in with AI and machine learning, you don't need to learn how to code anymore. You just need to be able to instruct machines to create the algorithms for you. And again, these work 24/7. Well, depending on the market that you're trading, these work 24/7 in the markets that I trade. Not 7, 24/5. So that's basically how you mitigate risk. And again, I think it's suited to most people because of the fact that to do this manually, you can do this manually. You can trade 10 instruments and you can move stop losses to break even, but it's just so much work. Unless you have full-time dedication to the chart doing this, and you generally like sitting in front of the charts for 8 hours a day, which I don't, you can do this, but it's so time-consuming and complicated. Whereas I've opened this today. Last week, I think this account was on about 12% return. Now it's 13.5% return in the last few days. I haven't looked at it. It's executed positions. It's had 4 wins. It's had 2 losses. Actually, no, it says 4 wins and 1 loss since last week. One very small loss. So that's basically how algorithmic trading works. And I generally think if more people went into this sort of trading, they'd have a lot more success. There's no emotions involved in this. I either lose a position or I win a position. Regardless, I have zero emotion towards it because I know that if I just leave the law of probability do its thing, that the statistics will work out in my favor over time, because I know that historically, because everything's based on data, I know historically that this portfolio that I'm running has about 3% per month return on very low risk. You can adjust this if you want. If you're more of a risky person, you can bump that up a lot more. But for me, there's no need. I go for 3% per month. That's generally what I like to go for. And this is the type of low risk portfolios that I like to create. This is one of many. I don't just have one portfolio. I have lots of portfolios running on different accounts, different sizes, different risk models, depending on what I'm trading. So if you want to get into this sort of trading without learning complex skill, and you want 90% done for you templates to help you do so, wherever you're watching this video, there'll be a link somewhere where you can go ahead and book a call with one of our team members and we'll break it down for you. Happy trading.